All right, how you doing, guys? New effects with Black Flag Trading. It's almost 12 o'clock at night. It's September 19th, 2017, um, Central Standard Time here in Texas. So, really quickly, I wanted to talk about just trend lines this time. I've talked about Fibonacci's. I've talked about patterns. I've talked about candlesticks. I've talked about cycles and whatnot. Let's keep it simple. I just wanted to show you how. Let me delete everything just to show you how simple. And now it takes a combination of things that I use to determine price action. So we're obviously looking at gold. Okay, again, it's September 19th. We're looking at gold. Since I've been talking a lot about it lately, my bias is still absolutely bullish. Matter of fact, if you're someone like me, this last little bullshit pullback on gold, I'm telling you, it is just a gift. It is absolutely a gift, because you just have a chance to load up on it at a cheaper price. It brings your dollar cost average, not just on the commodity itself, but on stocks related to gold and silver, that much better. Okay, that much cheaper. So, but what I want to talk about is trend lines, and specifically trend lines and counter trend lines, and how to use them. Okay, I can honestly tell you, I'm not exaggerating. Okay, I do this every day. It's nothing. It's not a new concept to me. It might be to some of you out there who maybe don't know me or don't know my way of trading. But let me just say this: to be, as surgical as possible with the different levels, yes, you would need essentially a combination of things. I stopped using stochastics, Bollinger Bands. I don't use any of that crap anymore. There's just, for me, there's no need to. I mean, do they reinforce your technicals overall? Yes, but you don't want to. You don't want this chart to look like a freaking circus. Okay, you want to keep it as simple as possible, and I'm going to show you. If you draw your trend lines correctly, this is the very first thing I do in every chart. You can pull up any chart, literally any chart, any time frame, any chart, any security, any stock, any currency pair, any index, doesn't matter. You can throw anything at me, and the first thing that I will always do, before moving averages, before Fibonacci's, before any of that, is draw a simple trend line, handmade or hand drawn, let's call it, trend line. Okay, and I'm going to show you how you draw them and how they not only confirm trends correctly, but a break of a trend as well, and also a resumption of a trend after a pullback. So here we go. Okay, this is unbelievably important. Okay, and believe it or not, I see it every day. A lot. I honestly, I don't know who you guys are listening to, or who you've taught, or who you've learned this stuff from. I really don't know. Okay, there's I've seen it all. I've seen everything that's been out there. Believe me, I've been trading for 10 years now. I have spent so much time, quote unquote, following the gurus online in the beginning. Not anymore, obviously, but endless amounts of money buying this and buying that, and honestly, 95% of it was crap. Okay, was absolutely crap. There's a few legit guys out there that I know that they know what they're doing, but I'm telling you, just be very, very, very careful who you listen to online. Okay, it's absolutely crucial, because they may sound and look like they're the shit, but I'm telling you, you follow them for even a short amount of time, and you'll realize. I mean, you'll realize that that's not the case. I promise you. Okay, it's up to you. Their responsibility is up to you to find out. That's why I've been taking so much time out of my schedule for the last year and a half almost. Putting essentially free calls on my Facebook and Twitter, and that's fine because I want to show you guys, essentially what I've got. Okay, I don't mind that. That's fine. It's a little goodwill, so to speak. Okay, so I'll put in the time. I've had tremendous feedback on this stuff. I've had a lot of people make a lot of money over the last few months, just kind of piggybacking on me. But no, but what I'm saying is, if I were in your position, before I really follow somebody, or especially if you're gonna purchase something eventually from somebody, I mean, just back test it. Let them prove to you. If they know what they're doing, they should have absolutely no problem giving you some free information and content first, okay, before they pull the trigger on the sale. And it's okay if they sell you something, because I may sell you something eventually too. That's not the point. I mean, time is valuable, okay? Knowledge is valuable, experience is valuable. But don't just buy the first thing you see out there, okay? Backtest this, guys, and then just kind of make your own decision and make up your mind on whether it's worth it or not. That's it. Just like any other product. That's why they give free samples in retail and everything else that's out there. I mean, it's not a marketing strategy. It literally is to show you that, here, I believe in my product so much that I'll give you a free sample of it, and then if you want to buy, you buy. If you don't, you don't. But back test it first. So here we go. Literally, just with trend lines, you can find out a whole lot about the market and the price action. Okay, so again, this is the gold chart of the last 20 years almost. Okay, needless to say, an unbelievable fucking uptrend, just unbelievable. 250 an ounce back in 2000. And by the way, I know I've been talking a lot about, when markets crash, gold goes up and whatnot. Yes, in theory that's the case, but that correlation does break sometime. Because, very good example right here, from 2000 to 2007, for instance, before the crash, and that affected temporarily gold stocks as well and gold prices as well, and to eventually then just skyrocket. But from 2000 to 2007, the indexes just absolutely blew up before the financial crisis, okay, under Bush. And so did gold. So in theory, yes, they go opposite, but they don't always do that. And why has this essentially disregarded, from, let's just say from this 2000 to 2007, the uptrend in equities, because they're supposed to go opposite, right? Why did they disregard that? Well, because the fundamentals now took their toll on gold prices. Gold prices skyrocketed regardless of the market going up, because, and simply because, the unbelievably irresponsible actions, let's call it, from the central banks. They have been printing up money, guys, like there's no tomorrow, okay? Nothing has changed. It's only gotten worse, which is why I think we're in a new bull cycle of gold. In gold, I'm telling you. I've done my math, I've done my research. There's been almost always a 10-year cycle on gold, excuse me, on gold, back till 60s and 70s, and typically a 5-6 year pullback, then a 10-year cycle again, 5-6 year pullback. Overall, it's only gone up. Why? Because overall the dollar has only gone down, literally, since the Federal Reserve took power back in the 30s. The debasement of the currency, that's why it's called fiat money. There's no real value in that piece of paper, okay, that stack that you have in your pocket. It's only as valuable as our hope and belief in it is, okay? That's why it's called its legal tender. Essentially, the government gives it permission to be exchanged for goods and services because the paper itself has no money. That's why gold is not a safe haven investment. It's really a currency. It's really a currency. It's the only currency, matter of fact. Forget Bitcoin and all that bullshit. Forget that. It's the only thing that's only gone up literally the last 100 years consistently. Have there been pullbacks, pullback cycles, depressions? Sure. But overall, it's only gone up. So here we go. Okay, ready for this? Let's take it from 2000 level. We have our long-term upward trend line. Oops. Right there. We have a shorter term. Oh man, I'll tell you in a second why I'm kind of snickering at this. But so, and then we have a a third more short-term trend line. So this is what you do. Okay, this is what you do. This is the rule, plain and simple. This spike from the 2008 crash, okay, or 9 or whatever that was at the bottom of the crash. This spike, this was essentially due to QE, okay? The bailouts that Obama pushed through, the unbelievable amount of money printing from the Federal Reserve, the quantitative easing program, the low interest rates, just print. That's what took gold to that, okay? So, while there's billions invested in research and analysis and manpower, and let's get the next hot rod out of fucking Wall Street to tell us what's about to happen, I'm telling you, you don't need it. You do not need it. They were looking for correlations, because correlations sometimes break. They were looking for correlations between bonds, interest rates, equities, gold. You don't need it. This is literally all I needed to know that at this point we're coming back, and I'll show you. This third inner trend line, okay, this short-term upward trend line. So there's a inner, an outer, and a long-term, right? Let's call them. There's a rule. Once this inner breaks, and what I always say, it breaks it and likes to come back to the back side of it. So that's a 2011 high, right? 1920. It broke it, came to the back side of the trend line, which was a sell. It's just that simple. That was a sell. And what's the rule? Well, it's bound to come down to that outer trend line. And it did. Okay. So we're done with that. That served its purpose. We knew that that was a high. So anybody that knows this stuff, literally, I mean, I'm literally just drawing 3 lines on the chart, guys. And you would have known, if you know how to draw them, okay, connecting those higher lows, okay, you would have known that this level, because there was no way of knowing here, because this could have kept going up and up and up. But once this price action formed and broke the inner trend line and came back to the side of that, to the back side of that, yes, that 1788, which would have locked in a whole lot of profits if you had bought from 2008, just 2009, just those 2 years. I mean, you know that gold absolutely fucking took off from 700 to 1920. And gold stocks, by the way, I've tracked quite a few that went up. Holy shit. I mean, 50, 60, 180 times. Penny stocks, okay, just speculative place, but regardless, fortunes were made just in 2 years, okay, if you know how to time these and pick them. So we knew that that little break and test, come back to the back side of the broken trend line, was a sell point. And that's all it's done. That's all it's done. So overall though, forget the pullback, because markets always correct. I've told you that they never go only up and down. I'm sorry, only up or only down. They go up and down on their way to wherever the fuck they're headed. So where is this headed? Well, if you know anything about technical analysis, you know that we're still in a massive uptrend. forget the pullback. The pullback was bound to happen. Okay, these last 5 years, the theory held because the stock market has absolutely killed and just made highs and highs after highs. So yes, people went back into the equities and got out of gold, causing this depression. But again, it's very normal. And where did it come down to? Let's take it from the last low. 50%. They always at least correct these waves, this A, B, C waves, always at least correct to the 50%. 618 is ideal, but I honestly don't think we're going to make it there. I really don't. But who knows? So let's take the Fibonacci's out. So now, that's very important. What I just said is because your overall bias is what's going to determine how you play this. So because if you don't know where this is going overall, then these lines don't mean shit. Okay, it's just that simple. But if you know that, then you know that, okay, boom, the inner broke. So okay, then we're bound to retrace. So we're going to come back to that C point, A, B, right? So first one broke, is bound to come back to the outer trend line. If that breaks, it's typically bound to come to the long-term outer trend line. I really don't think that's going to be touched. It could. I don't think it's going to be tested, just based on this unbelievable spike and then a little contraction. Typically, it rarely goes past the 50% pullback. Okay, that's when we add other indicators for this, to specifically know where that bounce should be and when to get long again. But since we're talking trend lines, let's take the trend lines. Let's take this out. So we determined that, okay, after a massive run up, prices pulled back. So we determined the trend. There was a massive uptrend until it broke, and that's when it tells you that it's bound to pull back, at least momentarily. Now, momentarily in this case was the last 5-6 years, but still, you're looking at a 27-year chart here. So it's okay. It's still momentarily a pullback in this context. So now I'm going to show you how to draw the other side of this, which is the counter trend lines. Why do we do that? We do that to confirm the resumption of the uptrend. I'm going to repeat that. To confirm the resumption of the uptrend, in this case, because I think it's an overall uptrend. Okay, we haven't established it yet because we need to make new highs, but it's predictive trading. That's what I do, right? You've been following me for a while, so I think we're in a massive uptrend. I honestly see the next 5 to 10 years gold 25 to 3,000 an ounce. It's just that simple. The reason I'm waiting for a stock market crash is because once that happens, I think this is just gonna, it's just gonna cut that time in half, and it's gonna blow up to that point. Okay, just like it did in 2009 to 11 after the crash and QE programs and all that stuff. Because when people think the world's about to end in the stock indexes, they go to gold. So not only technically we're beautifully set up to blow up, but fundamentally because we're at all-time market highs. That correlation, however, has broken because look, we're making new highs in the market. You know that, okay? Dow, Nasdaq, and S&P. But for the last 2 years, gold has carved out a bottom when it should have kept falling. So if you have enough experience looking at this stuff, you'll know that. That's the biggest red flag right there. When the correlation breaks, when markets have been only going up, let me see. Okay, so Dow Jones, and we're slowly making it to that 23,000 level that I've been calling, by the way. So the Dow Jones has only been going up and up and up since that Brexit bullshit a couple years ago. From 16,000 to 23,000 almost. Well, the last 2 years, I'm sorry, but gold has carved out a bottom. So that's your first big red flag. Gold is going up when it shouldn't, in theory, because the market's been going up and gold should have kept going down. Okay, proportionally speaking, where the indexes have gone lately, gold should have been at 1,000 or below. So now this is where some, you got to think on your feet a little bit, and where some real analysis and research coupled with a certain level of IQ, because you have to be a little smart to kind of figure this out, okay, to put one and one together. So now when the correlation breaks, you have to pick a side. You have to see which one is wrong. Could it be that this bottoming out is wrong after this massive pullback the last 5-6 years? Okay, or is this valid? It's carving out a bottom here and starting to go up. And the other flip side of that is that the markets, having been in a massive uptrend since the crash of 2009, are due for a pullback. So which is it? I say the stock market is due for a massive pullback. You know that. You know my position on this. Okay? So you have to pick sides now, because the correlation is broken. All-time market highs, and gold is finally starting to turn around from that last pullback, these last 5-6 years. So you have to pick a side. Which is it? Do you think gold is going to keep going down? Or do you think the markets are due for a pullback? I mean, I don't know. I mean, I say the latter. I say the markets are due for a pullback. You can say it's a matter of guessing all you want, but I have yet another tool that I'm about to show you. So just like we drew these trend lines to essentially to determine the uptrend, okay? So we're still in a massive uptrend. Overall, we are. Forget the pullback, okay? This pullback is what we want, because it allows us to buy stuff cheaper, okay? So now there's one more tool and one more way of drawing the trend lines that will kind of help you confirm your overall bias. So if I'm thinking that we're overall going up again and we'll make new highs, how do we know when it's time to buy exactly? Well, since we're talking about trend lines, let's just stick to trend lines. I'm not going to bring in moving averages, because that helps too. I'm not going to bring in Fibonacci's like I did, because that helps a lot. But let's just stick to trend lines. This is what you do. So once you confirm the uptrend, like we did, okay, it broke, so pullback was due. Now this is what you do. From that last high in 2011, you connect, because it's been a downtrend, even though it's only been for 5-6 years, but it's been a downtrend nonetheless. You connect those lower highs. That's the definition of a downtrend. Just like higher highs is an uptrend, right? I hope you know that by now. We connect those lower highs, and what do we look for? We look for a break of this counter trend line. I hope you're not confused. It's very simple. We're calling this a counter trend line because the trend, in my opinion, is up. So this little pullback is a counter move in the big picture. So the counter downward trend line, we look for a break of that. And that will confirm that we're about to resume the overall trend, which is up. You've been following me on Facebook, I hope, the last month or so. I've been calling for higher highs and higher highs on gold, on the hourly and whatever. And that's what we've been making. That's exactly what we've been making. The counter trend line from 2011, the last 6 years, literally just got broken. And look, it got respected here, but it failed to make a new low. Now it broke it. So now we can add in some indicators, and this is what's gonna happen. I'm sorry, but I've seen this shit way too many times. And even if this doesn't work out, guys, even if this doesn't work out, I'm telling you, you have to get this through your head. You have to realize that, first of all, you're not gonna get them all right. But I mean, I would be very surprised if we don't hit 1,500 and above within the next few months. Like I said, all time, long term, easy 2,000, 3,000 an ounce. I mean it. I'm not, this is not a bold claim, because just like I did here, I'm doing this. I predicted the Dow Jones bottom at 2009 with the exact same way of trading and analyzing it. Break of the counter trend line because overall we were up. The moment this broke, it was a resumption of the uptrend, and that's what the fuck it did. Guys, keep it simple. Just do the same thing over and over again. Doesn't matter. That's why I said doesn't matter what you bring in front of me. So now we have the down Fibonacci's against the up. Look for those confluence levels. The ABC 127 for this ABCD move is at 1470 roughly. The ABC 618 or 1618. So the second target is exactly at the 618 retracement of this. So these are just short-term targets, okay? I'm just talking for the short term in the next few months. So I say 1470 to 1580 by, I don't know, maybe early 2018. I don't know. Timing is hard to predict because you could have sideways move. I don't know. I don't know. It could be overnight if something happens with North Korea or whatever. It could be, I don't know, 6 months. Doesn't matter. Doesn't matter. I am convinced that we're going up on gold. It's just that simple. And I'm convinced that we're due for a major freaking pullback on the indexes. Bam. There's all my levels that I've had here. I mean, for literally years. Years and years. 6,500 NASDAQ. That's where we're at. I mean, you know, flirting with those levels. S&P, I've had 2,500. And Dow Jones, you know this very well because I even did a video back in April. I said, you know, 22.5 to 23,000. We're bound for a pullback. That's all the markets are doing. That's it. That's it. So this last little push up in the equities is causing gold on the daily to just pull back a little bit. But that was to be expected because it literally went up from $1,200 in end of June. I mean to $1,350. You know that just about a week ago. So yeah, it's due for a little pullback, man. Some profit taking is going on. That's it. So any pullback, I'm telling you, it's a buy. It's a buy. I would be unbelievably surprised and disappointed, and it can happen. Anything can happen. I'm wise enough to know that. But I'm telling you, I will be very, very, very surprised if we don't hit first 13. We gotta hit this level, so 1380 roughly, then 1470 and 1580. So it basically $100 increments in gold. Okay, 1384, right, which is a 38%. Okay, because it always, you know, it hit it here already. It touched it, so it's gonna retest that. But I think it's gonna go blow through it eventually. It might find a little resistance, but it's gonna go to the 50% of this AB, and then eventually do 618. And there's pretty good confluence with these up A, B, C, D extension targets, okay? Because the 127 is right at the 50, the 1618 is at the 618 of this. Anyway, so that literally, I mean, that's when you add your other indicators to, you know, for some additional precision, okay, and calculations. But honestly, if you're trend trading, this is all you need. I swear to God, this is all you need. All the talk back in 11, I remember the financial media. Oh my God, every fucking day, gold this, gold that. Oh, where's it gonna go? I'm telling you, this is literally all you needed. Once this shit broke and got tested to the backside of the broken trend line, I'm telling you, man, it's time to go down, and it did. I haven't touched gold since 2011 until about a year ago. I haven't. I even touched it before my confirmation because I actually bought at 1100 and it hadn't broken this counter uptrend yet. It was very predictive trading, obviously. It was a big risk, but I caught it because we were at the freaking 50% Fibonacci pullback. Boom. That's when I bought. And I have a pic from December 2015 on my timeline that I literally say, this is the lowest you're gonna find gold for a long time. I swear to God, it was like 1120, and it hasn't gone below that for the last year and a half. Okay, so trend lines to determine the trend first, then to determine the break of the trend second, and then, you know, if your bias is bullish like in this case, or bearish, but in this case obviously I'm bullish overall, the counter trend line, the counter downward trend line, the moment that's broken, it's your confirmation, that's your cue that we're about to resume the overall trend, which in this case is up. It's that simple. I'm adding no moving averages, no stochastics, no, you know, max, no RSIs, no I mean, you're literally just looking at candlesticks and a couple of lines across them. And that is how powerful this is if you know how to draw them. Let MSNBC fight it out like idiots, and Fortune magazine and the Wall Street Journal every fucking day as to what's happening and what's, you know, they're always gonna blame it on some black swan event and this and that. I'm telling you, this is all that I needed back in 11 to know that, hey, that's it. This price action, I recognize this. The inner trend line broke, came back, it broke it to the back side of it. That was our sell. That was our sell point. That was our sell point. That's it. So now, since we have new lows, we have to be thinking south. So draw that downward trend line and wait for it to break again. Now, yeah, it took 6 years, but that's because we're looking at a freaking 27-year chart. But I'm telling you, I mean, unless some fucking manipulation goes on, which I really doubt, because central banks themselves are literally just grabbing up as much gold as possible because they're seeing the unbelievable mistake they've done over the last few years. Whether it was a mistake or done intentionally, I don't know, but the debasement of the currency across the board, euro, yen, the major ones, especially the dollar, by printing up as much fucking paper money as possible. Okay, I'm telling you, it's gonna take gold well above 2,000, 2,500 an ounce. How do you play this? Well, I'm about to show you in the report that I'll put out. It's taken a while and I apologize, but we've had some issues with the website. I had 2 guys get me a sample of it and I didn't like either one of them, so I had to go to a 3rd guy, believe it or not. I apologize, but we still have plenty of room to write those stocks that I've handpicked. By the way, every one of those 10 stocks that I have in that report that I'm going to sell is up. Every one of them. They're still, it's just barely, I mean, we're scratching the surface. There's still plenty of upside, but literally every one of those 10 stocks is up since August when I put out the video when I was in Miami. Okay, anyway, again, to recap, confirm the trend line with the trend with the trend lines. We have upward trend line, so it's a bullish move. Then draw your inner trend lines to look out for that break of that, which would indicate a short-term or temporary pullback. So we had a change in trend. Okay, overall we're still bullish, but this break confirmed that it was bound to come back, and it did the last 5-6 years. And then draw the counter trend lines, and the moment that's broken, that's your cue that the overall trend, that's the confirmation of the resumption of the overall trend, which is up, in my opinion. Okay, so that's it. I hope this helps. Like it, share it, do whatever you fuck you want to do with it, but just keep it simple. That's what I'm trying to tell you. You can literally trade this just with trend lines. Literally, you can trade the markets, especially for long-term investors, with trend lines alone. No Fibonacci's, no moving averages, nothing else. This will tell you when the trend's about to change, when it's about to be reconfirmed again, and when it's about to resume going up again. That's it. All right. Thank you.